A defaulted account is one of the most common types of bad credit registered against people in the UK. So, if you have a default on your credit report and you're worried about how it might affect your chances of getting a mortgage, then this video is for you. Now, for anyone who doesn't know what a defaulted account is, let me quickly explain. A defaulted account refers to a situation where a borrower has failed to make the terms of their credit agreement, for example, a credit card or a loan. When an account is marked as defaulted, it usually means that the borrower has missed their payments for a certain period of time. If you've had a default registered against you, then it will be shown on your credit report for a period of 6 years. And the key details that it will show are the amount that was originally registered against you, the date that it was originally registered on, the amount that you still owe, or whether this has been paid back. If it has been paid back, then the date that it was paid back, and who it was who originally registered the default against you. So now that you know what a default is, let's discuss what your mortgage options might be if you have one. Having a defaulted account can cause a lot of problems with certain mortgage lenders out there, but there are certainly still mortgage lenders out there who will still consider it, depending on what the circumstances were behind the default actually happening. The main things that the mortgage lenders will want to know before lending you the money are, number one, when it was originally registered, number two, how much deposit you have or how much equity you have in your home if you're remortgaging, and number three, how much it was originally registered for. Number four, what was it registered for? Number five, has it been paid off? And number six, why was it registered in the first place? So let's go through these 6 points one by one. Number one, when was the default originally registered against you? This is one of the main things that mortgage lenders will want to know, and the more time that has been passed since the default was registered, the higher your chances will be of approval. The exact timeframes go hand in hand with how much deposit you have. So in the next point, we're going to be breaking down how much deposit you will need depending on when the default was registered. Point two, how much deposit you have available, or if you're remortgaging, how much equity you have in your home. This will typically depend on when your default was registered. Now, if your default was registered for an amount for under £500, or if this was for something like a mobile phone contract or a broadband account, which might be shown as something called a communications account on your credit report, then take what I'm about to say with a pinch of salt, because there are exceptions that can be made. If your default was registered between 6 months and 1 year ago, then it's likely you're going to need at least a 15% deposit. If your default was registered between 2 years and 3 years ago, then it's likely you're going to need at least a 10% deposit. And finally, if your default was registered over 3 years ago, you might get away with as little as a 5% deposit. Point three, how much was the default originally registered for? If your default was registered for an amount under £500, or better yet, under £300, then you might even be able to get a mortgage with as little as a 5% deposit. So remember, the lower the value of your default, the higher your chances will be of a mortgage approval. Point four, what was it registered for? The type of account that the default was registered for can make a difference. For example, if this was registered for something like a communications account, then there are a handful of lenders who can completely ignore the default like it never happened. And just like before, this might mean you may get approved for a mortgage with as little as a 5% deposit. Point five, has the default been paid off? Quite a short and simple one, really. If the default has been paid off, it probably will increase your chances of being accepted for a mortgage. When it was paid off can also be a factor here too, with the typical rule being the longer ago it was paid off, the higher your chances will be of being approved. And finally, point six, why was it registered in the first place? Some lenders will take into account why the default was originally registered in the first place. For example, if you perhaps fell seriously ill with something like cancer and just couldn't afford to pay your bills, which led to the default happening, or perhaps you came out of a messy divorce and you were struggling financially, then this is something that will always be looked upon more favourably than perhaps if you ran up a load of credit card debts and then just didn't pay that back. So, to summarise, a defaulted account isn't the end of the world when it comes to getting a mortgage. However, it's important to remember that a mortgage lender will look into other circumstances when deciding on whether to approve your mortgage, such as your nationality, your employment status, or the income that you're earning. But by understanding where you are today and taking proactive steps, you can still make your home ownership dreams come true. If you have any questions or any ideas about future videos, please feel free to put these in the comments below. Alternatively, if you'd like to send us an email, you can also do that, and we will put the email address in the description below. So, thanks for watching. Please make sure that you hit the subscribe button and turn on the notifications for all tips on bad credit and all things bad credit mortgage related, and we will see you in the next video.